Today, we will talk about the subject of carriage and insurance paid to, CIP. Carriage and insurance paid to is when a seller pays freight and insurance to deliver goods to a seller-appointed party at an agreed-upon location. The risk of damage or loss to the goods being transported transfers from the seller to the buyer as soon as the goods are delivered to the carrier or appointed person. CIP is typically used in conjunction with a destination. For example, CIP New York means that the seller pays freight and insurance charges to New York. As is the case with carriage paid to, carriage or freight charges with CIP refer to transportation charges for any accepted mode of transport, such as road, rail, sea, inland waterway, air, or multimodal transport that involves a combination thereof. As the seller is only obligated to purchase the minimum amount of insurance coverage to transport the shipment to the destination, the buyer should consider arranging additional coverage that protects the shipment from all risks. Otherwise, the buyer may have to bear huge losses if the shipment is damaged or lost through some adverse event that is not covered by the minimal insurance provided by the seller. The buyer may also ask the seller to provide extra insurance coverage and, depending on the relative bargaining positions of the buyer and seller, negotiate for the seller to bear part or all of the cost of such additional insurance. CIP is a globally accepted Incoterm devised by the International Chamber of Commerce that regulates the cost of shipping items in a business sale. It requires the seller to pay for both freight and insurance costs in sending goods to a buyer chosen by the seller at a mutually agreed-upon location. As soon as the goods are delivered, the risk of damage or loss becomes the buyer's. The seller must take out 110% of the contract value in insurance. If the buyer wishes to have more insurance, arranging and paying for it is their responsibility. Any form of recognized transport can be used, including road, rail, sea, inland waterway, air, and any combination thereof. Carriage and insurance paid to means that the seller will pay freight and insurance when sending goods to someone they choose at a location they both agreed on. The seller has to insure the goods being sent for 110% of their contract value. CIP is an Incoterm, which is devised by the International Chamber of Commerce, ICC, and accepted worldwide. Here are 3 key takeaways. 1. The term, carriage and insurance paid to, CIP, signifies that the seller will pay freight and insurance in sending goods to someone chosen by the seller at a mutually agreeable location. 2. The seller must insure the goods being sent for 110% of their contract value. 3. CIP is an Incoterm, one of 11 devised by the International Chamber of Commerce, ICC, and accepted around the world. Hope this would help. Thanks for watching.